save your objections, comments, and all that till let me get through it, get the story out, and then we'll have a rip-roaring discussion, and you guys can tear it apart or agree with it after that. We should have plenty of time to do that. So, here's the outline of my talk today. I'm going to focus on 4 questions. I'm going to make an argument that a key breakdown in our social technologies has been a breakdown in a social contract. I'll talk about what I mean about that in a second. I'm going to ask, what broke the social contract? How did breaking that contract then impact people's psychology and how that in turn has fed back into our politics? And then I'm going to start talking about how we might rebuild and build up a new social contract. So what do I mean by a social contract? This is an old idea going back to Socrates. Jean-Jacques Rousseau is the first one who actually used the term in a book, 1762, but also folks like Hobbes, Locke, John Rawls have all written about this notion of a social contract. And typical of philosophers and academics, there's lots of ways to define this. The way I'll use the term is it's an implicit or explicit agreement on the moral and political rights and obligations between people in a society. And there's also a notion of it's a settlement that balances the interests of individuals, commercial interests, political interests, and broader societal interests. In shorthand, it's notion of what's the deal? What's the deal between you and society, and what's the deal among different interests in society? And I'm going to particularly kind of take it from an individual household perspective. When I ask what's the deal, I'm going to say, okay, if you're sitting in a kind of median household, say in the US, what are my obligations, what do I contribute, and what can I expect in return from society? So that's the way I'll be using this term. Now, I'm going to make an argument that this contract broke, and I'll show some evidence for that. So, roughly, what was the social contract? I'm going to focus on the post-war period. So this isn't big history. This is sort of relatively near-term history. So in the post-war period, there was a notion that if you worked hard, played by the rules, were a contributor to society, in return, you could expect certain things. You could economically support a family, have some reasonable level of security. Now, we never expect perfect security. There's always going to be ups and downs and, issues in life, but a reasonable level of security. You could do things like own a home, be a respected member of your community, expect a dignified retirement. And a key one was this notion of that your children could do better than you, that there was an upward escalator of American life, the American dream, that prosperity would grow, we would share in it, and our kids would do better than we did. And I should note as a caveat, and I'm going to come back to this, that this social contract primarily applied to white men. There were excluded groups from this social contract, African Americans, women, and so on. But if you were a white male during this period, this social contract worked pretty well. And was actually pretty true. And here's a bit of evidence for that. During this period, in the US, we had very strongly shared growth. That as national income, which is that black dotted line per household, rose up, that wealth was shared across the income spectrum. That whether you were in the bottom 90%, the blue line, top 10%, a rising tide did lift all boats. And in fact, the bottom 90% did a bit better than the rest of the boats. Did a bit better, in fact, than the top of the income spectrum. But then, around about 1973, that changed pretty dramatically. And this chart shows a average real income for the bottom 90% from actually a longer-term perspective from 1915, and you see this tremendous growth in the post-war period, and then this sharp break to income stagnation starting about the mid-70s. And this is what economists have now started to call the Great Decoupling, where the prospects of most workers in America started to decouple from overall economic growth. So this is showing wages, real wages versus productivity. So the economic theory says that as an economy gets more productive, real wages per capita, should go up. And that was true through most of the post-war period, and then that relationship blew apart. Productivity kept rising, workers kept getting more productive, but they weren't sharing in those benefits of their own productivity through their wages. And at the same time, and this is by now a pretty familiar story from Piketty's work and lots of debate and discussion, the top ran away. And so this is the same chart you saw before, but going now from 1973 to present, and you see that the bottom 90% is growing below national income, stagnating, and meanwhile the top 10%, top 1%, and top 0.1%, that top line, have taken off into the stratosphere and have detached from the rest of the economy. And we talk about, there's this phrase of the left behinds. I think people don't realize how big the left behinds are in just pure income terms. That 90% of households were left behind by the growth from the mid-70s onward. What this chart is showing is average annual income growth by income decile during the same period, 1980s to present, and you see that only the top 10% grew, again, above the average of the economy, and this sharp curve shows how, how much the very top of the income spectrum took off and detached from the rest. This, in turn, has led to what also is getting called the Great Hollowing Out. That the middle class, the bulk of the population of the economy, both started shrinking and started falling behind the rest of the economy. So the share of the pie, the income pie of the US, that was kind of held by the broad middle of the distribution, declined quite sharply in this middle, while the upper took off. Interestingly, the poor kind of stayed the same. They were poor at the beginning of this period, they were poor at the end of the period. But the real shift in economic rents in the pie has been from the middle to the top. These income shifts, in terms, have also led, not surprisingly, to changes in how wealth, the assets people own, has also shifted. So, again, in this era of shared growth, you see, kind of the top and middle sort of holding steady, and then you see in the more recent period, again, the top 10% and 0.1% seeing their wealth grow quite substantially, while in relative terms, the wealth of the 90% declining, again, in relative terms. At the same time, these shifts in income and wealth were happening. American savings were plummeting, and debt was skyrocketing. And you can see in the sorry, it didn't not showing up for some reason on the screen. If you could see it, there's a gray box showing debt skyrocketing. It's showing up on my screen, but not on this screen. But we know what happened to the skyrocketing debt that led to the financial crisis in 2008. This is a chart Nick Hanauer showed yesterday. While savings was dropping and debt was rising, access to what economists like to call positional goods for a middle-class way of life were increasing faster than inflation. So things like healthcare, housing costs, cost of a college education. So even though during much of this period inflation was relatively well controlled, certain goods were increasing in cost much faster than inflation. So your stagnating income, declining savings, and cost of things like housing, college, etc., you can imagine the stress that's putting on, again, a very large number of middle-class households. Over on the firm side of the economy, things were also changing in some quite fundamental ways. So for a long, long time, as much as we have data for, firm investment and profits were linked. When profits went up, firms invested more. When profits went down, they cut back on their investments. And there's a very strong correlation between the two, and it makes perfect sense. But around about 1973 or 75, this relationship decoupled and blew apart. We see now in recent years, firm profits have headed up to the stratosphere, and firm investment is headed into the basement. Companies were making more money than ever, but they stopped investing. Now, where did all that money go? Into buying back their own stocks. And I couldn't get longer-term data, but this just shows that 90% of profits now don't go back into the real economy. They go back into buying stock. Now, the economic theory says, well...
Stock plus dividends.
Stock plus dividends, thank you. The economic theory says, well, if a company can't make good use of the cash investments, it should return it to shareholders. They'll invest in other companies who will make better use of it than that company could. Well, that works if just a few companies are doing that and other companies are actually investing. But when all of the companies are doing it at the same time, you get this merry-go-round. And I've talked to some chief investment officers about this. And they say, they're supposedly doing this for us, returning the money to us, so we can make better use of it. But what do? We put it in our asset allocation model, send it right back into the same set of companies, and then they send it back to us. And so this money, this trillions of dollars is just ping-ponging between asset managers and companies, not touching the real economy, but it is doing one thing. It's making the stock options of those executives go up and up and up. So there's this kind of merry-go-round sort of Ponzi scheme going on. Now, shifting back to the household sector for a minute, we've also had this, what Jacob Hacker at Yale has called the Great Risk Shift, and what some people are also calling the new precariat. I think the precariat was a term Marx used. Sam would probably know that better than me. But that in addition to this kind of stagnation and loss of savings and so on, that life has become riskier for most households. There's been an increase in the volatility of income, even as it stagnated. Nick just gave me this statistic 10 minutes ago, which I dropped in here. 41% of individuals see plus or minus 30% changes in their month-to-month income, which is just an astonishing statistic at how uncertain income is for large numbers of families. We've also seen a rise in volatility of employment, loss of job security, greater reliance on two incomes, while at the same time more families are headed by a single earner. Again, I mentioned little savings and debt, drop in retirement security, loss of defined benefit pensions, and also greater economic risk from healthcare costs. So life has gotten a lot more precarious as this has all been going on. And the notion that of families living one paycheck from disaster used to be a feature of the poor. The poor lived in this precarious state. It's now become typical of the middle class in the US. And that's a pretty stunning thing to think about. This, in turn, has also had some effects on our health and well-being. A case in Deaton did a paper that got quite a lot of notice. Some of you may have seen it a couple of years ago, what they called the economics of despair, showing that actual life expectancy for white males in the US, or the deaths per thousand, this left chart, has actually been increasing. So life expectancy has been going down. Well, it's continued to decrease for most other developed countries. So we've had this very long-term trend of increasing life expectancy, decreasing death rates. In the US, that reversed during this period for white males. And Esther, yesterday mentioned that there's a sort of echo of what happened in the Soviet Union back in the 2000s. And we've also seen, the causes of that, particularly drug addiction, opioid abuse, suicides, diet and health-related diseases all rising.
Is that what poisoning is referring to?
Poisoning is drug overdoses, essentially. And just to, keep going with my rather gloomy picture, we talk about the end of the American dream, and there's real evidence for that. That a big part of the American dream, the social contract, was the idea of social mobility. That anybody can, if I can make it here, I can make it anywhere. Horatio Alger, my kids will do better than me. The immigrant stories of one generation, cleaning floors, and the next generation becoming doctors. That still happens in rare cases, but social mobility is now very low in the U.S. In fact, it's one of the lowest among developing countries. A country like Steen's country, Denmark, has significantly higher social mobility now than the U.S. does. And there was a very good piece in the Atlantic just the other month. I recommend you all read it. That this top 10% hasn't just run away from the rest of the country, it's now locking in. That those differences are becoming inheritable. Through a variety of factors, from how you raise your children, to where you live, to your access to a college education. They argue, and I think quite rightly, that this is creating a new kind of inherited aristocracy, and even things like assortative mating, that who people are marrying and things like that are also lining up between the top 10% and the rest. Now, I would argue that what's happened during this period was we shifted the nature of our growth model, of our kind of capitalist system in some fundamental ways. That in the post-war era, we had a constructive form of capitalism focused on investing, creating, building the economy and sharing the gains from that, and that we've shifted to a much more extractive form of capitalism with rents concentrating very heavily at the top. Now, and I'm going to come back to that argument in a moment, but if there's a feeling that the middle class have been screwed, I think there's pretty good evidence for it, and they've been waking up to that fact over the past couple of decades. So that's the economic story. I'm now going to spend a few minutes about, okay, what happened? These are real structural changes in the political economy settlement of our country. How did that happen? So again, note the timing. Almost every chart I showed you, the breaks and trend shifts started around about the mid-70s. And I'm even quite amazed when I look at the data how significant this period around 1973 happened. So what happened, in 73? Well, we know there were some terrible fashion errors, some questionable musical taste, some really cool cars. We also had the gas crisis, the OPEC crisis, big bout of inflation. Maybe those things had something to do with it. From my look at the data, the inflation crisis and OPEC crisis macroeconomically had relatively limited effects over a period of time, but I'm going to come back to how they changed our thinking about things in some important ways. So we have this kind of whodunit. And the usual narrative that's out there, these big shifts are, well, globalization, technology change. That shifted, who makes money and who doesn't, and market forces come to work, and that's what's happening. And you read this in the press and hear it from a lot of academics too. And the feeling is these are big tectonic forces beyond our control, so, it's a shame about this, sorry, 90%, tough luck to you, maybe we can help you a bit through, some policy and better, tax system or something like that, or, charter schools or whatever it is, but these are big forces beyond our control. What Nick and I are arguing in our forthcoming book is that actually what really happened was ideas and choices. That there was a shift in our thinking, and that caused us to choose to do different things in our social technologies and our arrangements that led to this. So I'm going to take you first through why the globalization and technology story doesn't work, and why the ideas and choices story does. So the first problem is a timing one. So the globalization story is real, it's been happening, but when you look at the data, it's really a kind of 1990s story onward. International trade share of world GDP in '74 was 35%. It was the same in 1986. It wasn't really till the 1990s that it started to, take a sharp bend to up to now 60%. And just some small examples, foreign share of the U.S. auto market was pretty tiny until the late 1990s, and then zoomed up to today about 30%. Likewise, NAFTA wasn't in place until '94. China didn't enter the WTO until 2001. So there is a globalization story, but it's a later story. Likewise, with technology change, we have to remember, the PC didn't even really start taking off until the '80s. The big wave of factory automation, lean manufacturing, all that stuff really happened in the '90s. Internet, mid-'90s, broadband, mobile phone, social media is really a 2000s kind of onward phenomenon. So again, these things are happening, but the timing is later. It doesn't help explain that kind of 1970s, why things started to break down then. The second problem with the technology and globalization story is we see a real difference in how different countries behaved during this period. If it was these big global tectonic forces, we'd expect lots of similarities across developed countries. France is facing the same technology set as America is. Denmark is facing globalization as well as the U.S. And this chart, which shows top 1% income shares, shows a very different pattern between what we call the English-speaking countries, US, UK, Canada, versus continental European countries and Japan. So we had that huge rise of the top 1%, again starting right around the sort of 70s, early 80s here, and we didn't see that in these other economies. Another way to look at the same data is who got the share of income growth across income deciles, and again you see these English-speaking countries on the right, where you had these big gains in the top 1% share, and continental European countries on the left with a much lower shift. So what I would argue is that, again, globalization, tech changes, are big forces affecting the economy. But the fracturing of the social contract started earlier. And it also has something to do with the specifics of the US, UK, and a few other kind of countries with these sort of more Anglo system of economic and institutional arrangements. And I would also, and I'll come back to this, as globalization and tech change continue to have a big impact on the economy, if we don't understand and address the issues that started earlier, it's only going to get worse. So I'm going to give you a different story, which goes like this. So we had this era of shared growth in the post-war period. We had inflation, Bretton Woods collapse. We also had a big demographic shift. The baby boomers, post-war baby boomers started entering the workforce then. We then had a recession, a tremendous takeoff in financial services, and the start of the runaway top 10%. Then the kind of globalization tech bubble, tech story kicks in. We then had the debt super bubble, the global financial crisis, and now we're into this kind of era of populism and a crisis of the geopolitical Western order. So far, so familiar. But overlaying along that was a shift in our ideas and thinking about how the world works. So during this period, we had the Keynesian consensus, or in Europe, the kind of social democratic consensus. That went into an intellectual crisis in this period of the 70s because it was seen as not being able to explain the crisis of stagflation, and the policies in this Keynesian consensus were not seen as effective. We then had the development of what's come to be called the neoliberal, neoclassical ideology, or the Washington Consensus, which really ran from this period of the late 70s through the until the recent era, and I'm going to argue in a minute, had a big impact on how we wired the economy. And now we're, I would argue, in another intellectual crisis about those ideas. we saw a big shift in the ideas that were dominant in academia, in policymaking circles, in the media, during this period. And on the left, I have some of the kind of intellectual forebears of that movement. Now, their work on these ideas started well before this. You know, figures like Milton Friedman, Hayek, and you know, figures in intellectual or economic theory like Arrow and Dubrow and so on. You know, there was a big ferment of thinking, and these weren't always consistent, and they conflicted a lot. You know, there were some working more on political theories like, you know, Hayek and Friedman, some working on more fundamental economic issues like, you know, Arrow and Dubrow or Eugene Fama, who I've got in here, or Tom Sargent. You know, but they created a set of ideas about self-interested actors, efficient markets, and the primacy of markets in economic life that then filtered through to a set of political ideologies and thinking, you know, typified by the figures on the right. Now, one can ask, okay, you know, changes in thinking, how do they affect real economic outcomes at a macroeconomic level? You know, the forces I described before were pretty big. So I would argue that there were three big changes in the Western capitalist model during this period, which actually have enough magnitude to them to explain the big shifts that I showed in the data. One is, that surprisingly doesn't get talked about much, is globalization of finance. So we talk a lot about globalization of trade, of goods and services, but again, that's a later story. The globalization of finance story did start in the 70s, and largely due to the collapse of the Bretton Woods system, shift to floating exchange rates, the opening up of current accounts, and then all of a sudden capital could start sloshing anywhere in the world. We also had, and this is where the oil prices story comes in, we had this huge recycling of petrodollars during this period that had to go somewhere, and they went into a newly globalized financial system. We had this huge takeoff in banking, which used to be a localized, very sleepy, conservative business, into the giant global kind of casino that we see today. And also along with that came a series of steps of financial deregulation. And you know, so this was a mix of both macroeconomic factors following out of the collapse of Bretton Woods, but also an ideology that doing all this stuff would be good, you know, coming right out of the kind of neoliberal, neoclassical thinking. Then we had the shareholder value revolution. You know, Milton Friedman's arguments that the only role of business is to maximize shareholder value, that we should link stock options to executive pay, you know, labor as a commodity to be minimized, you know, that we can deconstruct companies and through outsourcing make them more efficient. So there's a whole set of ideas that came up around this that got injected into the business school curriculums, got injected into the heads of senior management of companies during this period. And I actually spent 20 years at McKinsey doing that stuff and rewiring companies to behave in this way. And I can tell you, it really worked. We really changed the way companies ran. And then the third piece, this is the more familiar story, is the kind of neoliberal public policy agenda, shifting in the way we tax people, deregulation, decline of union power, increasing the flexibility of labor markets, which often meant paying people less and making them work more, and trade and so on. Now, you take these three big shifts together, and they all were supported and enabled by this neoliberal ideology, and they all had a similar effect. They all increased the power of capital versus labor in our kind of national political settlement. And then layered on top of that earlier shift, we then have the globalization technology story, and in the future, we're also going to have the AI and robots story. So, how did that breaking of the contract then shift into our psychology and politics? Well, underlying this is some very recent work in psychology that gives us some important clues. So the story is we had this post-war social contract. It broke down during this period from the 70s onward. That led to feelings of violations of fairness, reciprocity, and loss of trust among large numbers of households. That in turn led to a very specific response of moral outrage, which I'll talk a bit more about in a minute. That in turn has been whipped up and stoked by the media, including recently social media, and that in turn has led to tribalism, political dysfunction, and a breakdown of social norms. So I'm going to just briefly take you through this story. So first, there's been a thesis that, well, the story here is inequality. You know, that what people are upset about is rising inequality. This has been a favorite story on the kind of political left. But there's, but for one thing, people actually haven't been aware of how high inequality really has been, and this is some data showing actual inequality versus what people estimated at. But this data shows that, well, people would actually prefer a much more equal arrangement of income than we actually have. But some further work has said that actually what people are concerned about is not so much equality of outcomes, but fairness of process. And I'm just going to give you the distinction briefly. So let's say we're in a little group of friends and I drop a cookie on the table. How do we divide up the cookie? Well, our first response is equally. You know, let's say there's 4 of us, we each take a quarter of the cookie. Now, if I did that and I took half of the cookie, you know, my 3 friends would think I'm a jerk. And so there, our preference in small groups, our preference is equality. But what psychologists have teased out is that that's a default heuristic in a small group. When we get to larger groups, things get more complicated. And in a small group, dividing something like a cookie, the heuristic of equal division, makes sense because, well, how else would we divide it? Now, if you shift it in small groups to, let's say, Eric worked hard to make the cookie, and Nick was a slacker and didn't show up to do anything, then we might say, okay, Eric should get a bit more of the cookie than Nick. And that goes into the kind of fairness of process rather than the equality of outcome. Now in large groups, who's working, who's shirking, who's contributing, all that gets more complicated to monitor. And so what people look for is, again, a process that takes those things into account and comes out with a fair outcome. And equality or inequality can be a signal of a fair or unfair process. So again, in my cookie example, if I take most of the cookie, that would be a signal that I'm a jerk. But again, in a large group or a society, Bill Gates makes a lot of money. Well, if people think the process he made that money by through is fair, that he worked hard, he did something innovative, and so on, then they'll accept that unequal outcome as fair. But if they think the process is corrupt or unfair, so say a hedge fund manager who makes a ton of money out of the financial crisis, then they'll see that inequality as a signal of an unfair process. And there have been some really good papers teasing apart these effects actually quite recently. And this leads to some work that Sam here has really pioneered with his colleague Herb Gintis and a number of other folks, many of whom have had affiliations with the Santa Fe Institute, that humans are pro-social, other-regarding creatures who are reciprocal cooperators and altruistic punishers. And they've accumulated a huge body of evidence for this and how these behaviors work. And the basic idea is that, and Sam will talk about this much better than I will later this afternoon, but we have strong instincts to cooperate, but we're also monitoring our cooperation, looking for reciprocity in our arrangements. And when we see people who aren't contributing in a reciprocal way or free riding or defecting, we'll punish them even to our own self-harm. And this willingness to punish defection, even if it's harm to ourselves, actually is very important for supporting group cooperation. And this is some work by Farron and Dr. Key paper back in 2000, showing from some games played in the lab that if people are allowed to punish, they can enforce cooperation in groups much better than if they're not. And if you aren't able to punish, then cooperation breaks down. I think Sam's going to talk a lot more about this stuff later. And as part of our kind of human technology for enforcing cooperation, we've also evolved very strong moral senses and instincts. And again, Sam has written a wonderful book on this quite recently that shows how our moral norms help enforce and enable group cooperation. Now, when reciprocity or a contract is violated, it triggers actually a fairly specific response. And the psychologists have been looking at this even at the biochemical level. So imagine you're waiting in an orderly queue, like this one outside Buckingham Palace, and somebody barges through and shoves through to the front of the queue. What happens? What do you feel? Outrage. What a jerk. This guy's violating the norm. We have this arrangement that we have a fair process for queuing up for Buckingham Palace. This guy's shoving to the head. He's a jerk. Let's punish him. Confront him, sanction him, and so on. And the psychologists have shown that this actually triggers some quite specific reactions deep in the brain, yielding these feelings of moral outrage. And when we have feelings of moral outrage, the work also shows that it shuts down or inhibits other parts of our brain, including our ability to listen to other arguments, to think in what we might call a rational way. And quite interesting, Molly Crockett, who was here last week, has done some brilliant work on this. We actually also lose trust in kind of utilitarian arguments. So if you're feeling outraged and I say, no, calm down, you need to do this because it will be good for you eventually, or it's good for society, we can't even hear those arguments. And a great example was in the financial crisis. Bailing out the banks had a strong utilitarian argument. We didn't bail out the banks, the whole system was going to collapse. And so it was better for all of us in the long run to go through these bank bailouts. But from somebody's feeling a contract violation, hey, these guys screwed us, and they're not just getting away from it, they're getting a bailout for me, that's a reciprocity violation that makes us feel outraged. And you then get this big disconnect between these utilitarian arguments and our ability to engage with them, trust them, and listen to them. Moral outrage also fuels tribalism. Now, there's a lot of work showing we have strong tribal instincts to begin with, but when you add moral outrage to the equation, one of the reasons we have tribal instinct, or we are tribal, is because within tribes you have consistency of behavior and norms. We can predict what people are going to do. If we're part of the same religion, I kind of know how I'm supposed to behave, I know how you're going to behave, and things are predictable and consistent. But when there's feelings of contract violation, that can break down trust, cause the circle of trust to collapse, strengthen in-group versus out-group dynamics, and cause people to look for people who are like them, who share their moral outrage and feeling of violation, to punish or deal with those who are doing the violating. And we can be tribal on all kinds of dimensions, from kinship, geography, ethnicity, race, religion, occupations, hobbies, whatever it is. We will find a way to be tribal. Now, if we go back to our 1970s story, what else happened in the 70s that we haven't mentioned? Well, we had a big shift, a very positive shift, in including excluded segments of the population, notably African Americans and other minorities and women, into society, the workforce, and so on. This also caused significant feelings of status loss, particularly among white males. And this is quite a recent paper, very good paper, showing that economic hardship in absolute terms is not a good explanation for populist voting and votes for Trump in the 2016 election, but status loss was a very significant factor. And so we have this kind of perfect storm of people facing a reality in their own life in large parts of the middle class, of the loss of growth, loss of security, agency, prospects for the future, and seeing others get ahead. And who those others are may depend on your perspective in politics. They may be black people, women, immigrants, the Chinese, or if you're in the left, they might be bankers, rich corporations, pharmaceutical companies. But there was this notion of, queue jumping, contract violations, somebody else other than me benefiting, and this led to these feelings of contract violation, loss of trust, outrage, etc. This was whipped up by a media environment, which we spent a lot of time talking about last week, and then we can see the path into identity politics, tribalism, and so on. When you step back and think about this dynamic, at least my reaction is, it's amazing it took this long for it to happen. This was building over decades, and it's almost surprising it didn't explode sooner. So, last part, and then we'll get into the discussion. How might we fix this? Well, I'm not going to spend a lot of time on this, but Nick and I are working on a book that argues a key part of this is changing our kind of intellectual operating system, the way we think about the economy and capitalism and our social arrangements, that builds up from economic theory to political ideology to policies and practices to popular narratives. And we've had an intellectual operating system, which I loosely put under the label of neoliberalism, that again I've argued has led to a kind of antisocial, extractive form of capitalism, and we need to shift to new ideas that lead to a pro-social, constructive form of capitalism. And we can come back to this maybe in a discussion. And one of the mistakes that liberals made was that knowing that capitalism works, that markets and capitalist arrangements have helped enrich the world and created a lot of wealth from the Industrial Revolution onwards, and the introduction of capitalist principles into China lifted more people out of poverty than any other set of actions, certainly in modern history. That we need a different understanding of why those things worked. Why is capitalism successful? And we would argue it's not for the reasons the neoliberals claim, but rather it comes back to principles developed here at the Santa Fe Institute, that it's about innovation and evolution, and capitalism, and this is a key point, that capitalism creating cooperation, creating networks of knowledge and networks of cooperation. That we need a shift of thinking from kind of simplistic notions of the economy as an equilibrium system of self-regarding rational actors to a complex systems view. The economy is an unfolding process, dynamic, nonlinear, and so on. And this is very familiar stuff to folks here at the Santa Fe Institute. And this has led, in the work Nick and I are doing, to start rethinking, well, what does economic value and prosperity mean? That the economy is a cooperative, order-creating system, creating order both in our physical space and in our social space, our physical technologies and our social technologies. And this leads to real increases in human prosperity. Better solutions to human problems is the language that we use. So going from sweltering the heat to air conditioning, or dying from infection to antibiotics, walking everywhere to bikes and trains, and so on. These are real increases in human welfare. Or Nick's example, from soggy potato chips to crispy potato chips. And this leads us to a different view of what capitalism is about, that the purpose of capitalism is to provide these solutions to human problems. What we could think of as wealth is the accumulation of solutions or knowledge in the economy about how to solve our problems. Growth is the rate at which they are created. And that prosperity is the set of solutions that are available to society plus our access to those solutions. The purpose of business is not a narrow definition of maximizing shareholder value, but really is to solve problems. Businesses are cooperative ventures to solve problems for other people. That's one way to think about business. Now, you need capital to do that, so you need to create returns to capital to do that, but that's not the purpose of business, isn't to create returns for capital. The purpose of business is to solve problems, and it does that by creating incentives for people to work together. And likewise, markets create an evolutionary ecosystem that helps us discover and make available new solutions to human problems. So, at the heart of this is the idea that human cooperation is fundamental to problem solving. Now, there's a great video, a TED Talk, that I recommend to everybody about a guy in England who tried to build a toaster by himself. Completely by himself from scratch, you know, mining ore, you know, making his own plastic, you know, creating his own copper for the electrical wiring. And it took him, I think, 3 years. It cost him a huge amount, and this was his toaster at the end of the day. And when he tried to make toast with it, it nearly burned his house down. You know, he concluded this with, I love the phrase, it takes a civilization to build a toaster. And I think that's right. And if you look at any kind of, you know, complex object in our modern economy, you know, like a modern jet airplane, you know, this thing takes a global supply chain and cooperation of tens of thousands of people around the world. And so we argue that inclusion and a fair social contract are actually central to capitalist prosperity. You know, the neoliberal view could be characterized as saying that there was a trade-off between inclusion, equality, and economic growth. And this translated into political theory of trickle-down economics, where if we have growth, well, maybe we should try and share it in more fair ways. We think the logic is actually flipped, that inclusion is actually what makes economies grow, and a fair social contract is central to inclusion. And you need economic, social, and political inclusion. And when you include people, this sets up a virtuous cycle between innovation, creating new solutions to human problems, and the demand for those solutions. The flip side is exclusive economies tend to degenerate into rent-seeking, to not to be innovative, and you only get political stability in exclusive societies through authoritarianism. You know, the test is try to think of a highly exclusive economy that has been, you know, innovative and you know, long-term democratic. Now, what are the dimensions of a fair social contract that can promote inclusion and these positive cycles of cooperative problem solving? Well, one we talked about is reciprocity. Those who contribute will share in the rewards. Second is meritocracy, that the process is fair and that it determines how rewards will be shared based on some notions of merit. It's inclusion, that it's inclusive, that everyone has a chance to participate in this system. That there are notions of security because, you know, bad stuff happens in life, adversity happens, and you know, that people through no fault of their own who are encountering difficulty will be helped and protected. And then finally, there's a notion of progress. The psychologists show that, you know, notions of improvement, of progress are quite important actually to our psychological health, and seeing, you know, that our children will do better over time is also important. I'm going to wrap up quite quickly. In order to get to such a new social contract, we argue that we really do need to change this kind of intellectual operating system we have, and we really need to rethink some very basic things about our intellectual framework, from what we mean by political left and right, or conservatism and progressivism, the roles of the market versus state, how we measure progress in the economy, things like GDP, you know, what the purpose of the firm is, what the role of labor is, the role of morality in our economic system, and also, quite importantly, shifting from a view that the economy and environment are two separate things in conflict with each other to seeing the economy as embedded in a physical, complex environmental system. This is, you know, a pretty big shift in thinking. And we would also argue that even with this shift in thinking, there's no silver bullet. There's no kind of, you know, one answer to how we're going to fix this, but rather we need a broad program of reform in capitalism. And that has happened before. You know, we've gone through cycles like this where combinations of social and technology change have created crises in our capitalist system. We have, through very broad programs, managed to reform it. And I put up Teddy Roosevelt's picture because he's a good example of how a broad program of reform can change the trajectory of the system. And some of the levers for doing that, cut across all areas of policy: education, tax, labor markets, infrastructure. And the exam question we need to ask across these policy areas is, how do policies foster and support inclusion? How do they create a fair reciprocal social contract? How do they support innovation and problem solving? And how do they create political economy solutions that allow people to make enough of a living to be able to afford to buy the stuff in our economy and create this virtuous circle? Now, to try to, after my rather gloomy story at the beginning, give you a bit of optimism at the end, part of the genius of capitalism as an evolutionary system is it does evolve. We have seen capitalism and our forms of it make very significant changes over history, both driven again by physical and social technology changes. And we have seen these cycles where the system is more extractive, more rent-seeking, and when it is more constructive. So we are in a period of crisis now that's demanding a period of reform. And big theme of this workshop is we need to accelerate the evolution of our social technologies, which have been co-evolving with our physical technologies ever since our hunter-gatherer days. That these social technologies are now in crisis and need this fundamental level of rethink. And just a final word, if we don't fix this, there's no hope of addressing this. And if we don't address these issues that are breaking down in our current environment with AI coming, rise of robotics, gene editing, climate crisis, we will really be, as the English say, stuffed. So just to wrap up, give Albert Einstein the last word, say thank you, and open it to questions and discussion. And sorry about the death by PowerPoint, but I wanted to get the story out there and then hopefully stay